I look at this similarly to how one might look at the adoption of other internet protocols and technologies. So if you had an HTTP for money, that could unlock so much value for people, for households, for firms, and you could actually lower the cost of exchanging value to zero, just like it doesn't cost us anything to exchange data on the internet. Holy shit, there's this system that can connect everyone all around the world. And there was no commercial internet at the time. I was experiencing firsthand the decentralized nature of it. I was communicating with people behind the Iron Curtain who were doing what we now would call citizen journalism, documenting revolutions that were happening. And it was like, holy shit. When I kind of went down the rabbit hole on crypto, starting in 2012, and then, as I put together Circle, the immediate intuition was, oh my God, if we can do for value exchange what the internet did for information and communications, it's going to be like way bigger than the web, way, way bigger.
You're the perfect guy to ask this question. Will that change our lives and humanity more so than the internet and more so than mobile phone technology?
The impact in the world will be so much larger because you're talking about the organization of economic activity. This is also a natural evolution of humanity, a natural evolution of social and economic organization.
The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs, sharing our vulnerability, overcoming our fears, transforming ourselves so we can transform the world. How far can we go?
This is London Real. I am Brian Rose. My guest today is This is London Real. I am Brian Rose. My guest today is Jeremy Allaire, the business leader, internet pioneer, and technology expert. You are the CEO and co-founder of Circle, the financial technology firm that enables businesses of all sizes to harness the power of stablecoins and public blockchains for payments and commerce. Circle is the company behind the USDC stablecoin that has a market cap of more than $50 billion with over $1.6 trillion in transaction volume. You have more than 2 decades of experience building and leading global internet software platforms as the CEO of Brightcove, the CTO of Macromedia, and as an entrepreneur in residence at the venture capital firm General Catalyst. You have also provided expert testimony on digital assets and monetary policy before the U.S. Senate Committee on Homeland Security and Government Affairs, as well as the Banking Committee. At Circle, you believe now is a pivotal moment in the future of money that will open up global economic prosperity. Jeremy, welcome to London Real.
Thank you, Brian. Really a pleasure to be here with you today.
Very excited to talk to you. There's so much to go into. I actually have a DeFi Academy where I teach hundreds of students around the world. And so they're using these protocols every day. They're using USDC. We're using it as a business. And I want to go deep into it. So it's fantastic to have you here. I guess we should just jump in to stablecoins and specifically with the success of you exponentially growing USDC, which I believe grew 10x in 2021, 10,000% over the last 2 years. But maybe we start off by zooming out a little bit because you are old school, kind of an OG in the internet protocol space. And I think you look at USDC as less of a coin and more as like a protocol. Maybe the way that people would look at email or a web browser process. And maybe it's just another way for humans to share information. And in this case, it happens to be money. So I don't know if I got that right, but maybe tell me if I did, Jeremy, and tell me how you look at this whole concept.
Yeah, that's spot on, Brian. I kind of came to crypto and this whole space and really just sort of thinking about the financial and economic system from the lens of the open internet and open internet infrastructure and protocols, and sort of have watched really since I got involved in the internet in 1990, the sort of gradual incremental addition of more and more of these open protocols that are permissionless and people connect to, and that have opened up the world of information, the world of communications, the ability to transact from an e-commerce perspective, software distribution, all of these things that have been made possible. And really in 2012, I became fascinated by Bitcoin, and then crystallized a lot of the ideas for Circle in early 2013. And that was what I saw, right? It was this idea that there's kind of a new protocol layer on the internet. These public chains are themselves almost like, the TCP/IP, right? They're this base layer. Now, I actually think about public blockchains as internet operating systems. These are essentially a new class of operating system that is a tamper-resistant, incontrovertible data, incontrovertible transactions, incontrovertible code. It's a very special kind of operating system that has never existed before, because you've always had to have centralized people running data centers and so on. So this new kind of operating system that you can build protocols and applications on top of. And so what we thought very early on in the founding of the company was, if you saw that technology develop, that you could have a kind of protocol for money on the internet. I used to call it, there needs to be an HTTP of money. So people who've used a web browser and understand what that is, it's a way for us to exchange data in a very simple, structured way, and gave birth to this explosion of all, we can now get all of the world's knowledge instantly at no cost. That's pretty cool. So if you had an HTTP for money, that could unlock so much value for people, for households, for firms, and sort of money velocity could increase, which is a key driver of economic activity. And you could actually lower the cost of exchanging value to zero, just like it doesn't cost us anything to exchange data on the internet. So that was sort of the ultimate outcome that we saw becoming possible. And it's been a long pursuit to get there, but ultimately, yeah, USDC is an expression of that idea. And it is, it's a protocol. It has a payload, as we call it. It has a format, which is the dollar today, but it's a protocol also that can support other fiat currencies over time as well. And so that is how we think about it. And when you think about that growth that you just mentioned, the 10,000% growth over the last 2 years, we've added basically about 10 billion new USDC in circulation just in the past roughly 30 days. So it's growing quickly. We sort of think of it as like, other internet protocols and media formats, JPEGs, MP3s, HTTP. These have kind of network effects to them. The more people who plug into the protocol, the more value the protocol has, the more demand to utilize it. The more people who have a currency or a media format, the more utility that has. And so you get these network effects. And I think you were even describing some of those kind of finding their way into your own business, right? And so then you sort of say, hey, this is a better way to transact. And you start telling other people, I want to transact this way. And then people go, oh, wow, yeah, this is a better way to transact. And it sort of has that kind of effect.
Yeah, that's a great explanation. Although I'm curious, when you thought of the HTTP of money, in the early days, did you ever think it would morph into or be embodied as a stablecoin? Because you could have gone a lot of different ways with that, Jeremy, but obviously you ended up going with the stablecoin, perhaps in hindsight, the best choice. But was that always something on your mind, or how did that happen?
Yeah, so very early, the concept behind Circle was that there'd be a kind of hybrid digital currency model. That's what we talked about it back then. And the hybrid would be, you have an existing form of money, which is essentially the liabilities of a central bank. And those will continue to exist. Governments will issue debt, people will buy that debt, and that will be the dollar or the euro or whatever it is, these liabilities of central banks. And those are going to continue to be administered on centralized databases. As I like to say, the dollar is a Oracle database running on a cluster of Sun Solaris machines. That's actually what the dollar is, if you want to get behind the scenes, right? So you're going to have that. But then can you externalize that on the public internet and give it, kind of give that the superpowers of the internet? And that was kind of the idea from very early on. And in the first iterations of what we were doing, there were no second generation blockchains didn't exist. There was kind of Bitcoin and there were some other experiments. And so you couldn't build tokens and smart contracts. You couldn't actually create a protocol. So we built a protocol ourselves on top of Bitcoin that allowed you to, as I would say, tunnel dollars, pounds, euros over the Bitcoin network. And it had tons of issues, challenges, scalability, cost, all kinds of issues, FX, right, implicitly. And so the architecture, we pivoted basically in late 2016, early 2017, when Ethereum got to a point where you could actually build things on it. And I called it production beta, right? So you could actually build things on it. But it had the primitives and the building blocks to do this. And so we just raced to kind of build this and knew that, the right way to introduce this was more of as a kind of general market infrastructure kind of utility that could be utilized by the market as a whole. And that found product market fit pretty quickly.
Right. And now it's that protocol. It's used on 8 different blockchains right now. These are old numbers, maybe over 5 million active wallets. Again, I mentioned the volume earlier. I mean, now it's a protocol that's being adopted and used by so many people. Can you speak a little bit more on that? And why do you think it's become so popular?
Yeah, I think there are a few things. I think when we kind of set out to build this and deliver it in 2017, early 2018, there were certainly other projects in the market already. Some very decentralized that were emerging, like DAI. There was Tether that existed. And our view was that if you wanted to reach mainstream scale and have something be really a standard that could be used by everyday firms and households, by other financial institutions, that people looked at as this is as good as cash, so to speak, you had to do that in a particular way. And so one, it needed to be regulated. It needed to operate under the supervision of banking regulators. And in the US, we have a framework for that. There's a framework that has enabled so many fintechs to flourish, like Apple Pay and Cash App and Venmo and PayPal and tons of others. And so we worked with the regulators that have worked on these sort of electronic money innovations and got them comfortable with supervising what would be now known as a stablecoin. And that was important. And a kind of commitment to compliance, a commitment to transparency, auditability, like all these things. And we published it as an open source project. And we worked with, I think, many of the leading firms in the industry to help get this going. Like Coinbase is a critical strategic partner, getting this out there, making it simple for the average person to get access. Now it's, sort of broadly available across, kind of every exchange and wallet and so on. But, we focused on that. And I think those things mattered. As DeFi protocols were getting going, I think people were saying, well, if I'm going to have dollars, I want to know these are actually redeemable. And so it had the benefit of being something that whether you're an individual or an institution, that you knew you could easily create and redeem it at par at no cost. And that just worked. And that's key, right? At the end of the day, it's, the holding the peg it has to do with the reserves and the transparency, but it has to do with the fact that you can always redeem it for $1. And so for the, whatever it is, 110 or more billion USDC that have been issued, there's been 60 some billion redeemed. And so it works both ways. It's not a roach motel.
Right. And so people know when I go and buy a $1 of USDC and it's a new issue dollar, you go and then buy $1 worth of what? It's U.S. Treasury instruments and it's held, like you said, in a transparent, collateralized way. Just walk people through how that process works and how they know that collateral's there.
Yeah, so it's relatively straightforward. When someone transfers dollars to Circle, we will first make sure that there are that many dollars in segregated reserve accounts. The segregated reserve accounts are in cash within insured depository institutions and 90-day or less U.S. government treasuries. And so that is what this is. So it is cash equivalent, like, but even narrower. It's bound by that. And before, we ensure that there is that held in that segregated reserve before we'll actually mint new USDC. Now we kind of run our own settlement and liquidity operations to always make sure that when people are coming in, and we sometimes will see 1 billion issued in a day, we're always making sure that we're able to provide that continuous service for people. And when someone redeems, it's effectively the same thing. A USDC token is burnt. And once it's burnt, then we will move funds from reserve to a settlement account and then push it out to whatever bank account or whatnot that the end user wants to receive that in. And that's really it. And what we do is, we have regulatory obligations in the United States. Our banking partners, under stipulations from the Treasury Department, from the OCC, which regulates national banks. Basically, this was under the prior head of the OCC, Brian Brooks, basically said, if you're a national bank and you are providing accounts to hold reserves for a stablecoin issuer in the United States, you must get daily reporting on the location of the reserves, the amount of the reserves, and the amount of tokens outstanding that are proven on a blockchain. You need to have that every day. So we provide that to our banking partners who are regulated by US Treasury every day. And then once a month, we work with a global accounting firm, an assurance firm, Grant Thornton, who then will go and actually examine more closely the details of the accounts and the details of the blockchains. And they'll do their own methods to prove this is actually real on the blockchain. And then they'll issue an assurance report every week. We are also becoming a public company. So we're now filing with the SEC on a regular basis. We haven't yet completed our listing process, but we are filing. And so we are held to the accounting standards and examination standards of the SEC as well. So those are kind of the assurances that people have. And there's a lot of transparency around it. There's going to be more around this in the future. I think you'll see kind of federal supervisory rules in the United States around a stablecoin issuer like this that gets into a little bit more detail on disclosures, liquidity, operational resilience, kind of things like that.
Yeah. And I would say for anybody watching now, the devil is in the details. I got a real education in financial markets in 1993 when I started trading fixed income derivatives at Bankers Trust. And I used to trade treasury bonds out the curve. I used to trade derivatives on the futures exchanges. And the way you would be knowing that your future would track the underlying is by the settlement details. I would know that if I bought a bond future, that I know that someone would deliver me that bond at this point in time, or deliver me that amount of cows, or that amount of gold at this point in time, or the Eurodollar future would set against 3-month LIBOR on this date. And because I was sure it was going to happen, the instrument would track what we thought it would track. And it's so important that you have people thinking about those details. And again, the collateral being U.S. Treasuries and not, say, corporate paper, which is, again, it's high grade debt, but it's not the full faith and credit of the U.S.
That's
and
right.
The fact you guys are doing that with the transparency, it makes you different than any other stablecoin out there. And a lot of my students come to me asking your amount of stablecoin questions that I'm going to ask you today. But it's hard to know the difference between this one and that one. So I appreciate these explanations here. While we're at this, let's just cover some of the other options that pop up on CoinMarketCap in the top 25. Obviously, we see USDT, we see DAI, and we see the emergence of something like a Terra, which is an algorithmic stablecoin. Again, I guess while we're on the fact, these are some of the choices that pop up on a Uniswap or other exchanges.
Yeah.
And sometimes students don't know the difference, right? The first 3 letters are the same. So it's hard sometimes, even my academy students, to know what's the difference between DC and DT, because it can be a world of difference. Can you comment on those 3 other protocols?
Yeah, I mean, I think there are a lot of different approaches. I mean, I think I feel very good about the way we've constructed this product and this infrastructure, and I think we're really trying to be that kind of trusted, redeemable, compliant, kind of very, very well regulated and operated stablecoin. And I think for individuals that are thinking about this as something to hold, spend, settle, use as collateral, etc., there are the assurances that come along with that. Now, there are other stablecoins that are not regulated, that operate offshore, that haven't had the same amount of examination, supervision, or whatnot. Now, there's demand for that as well. As I like to say, there are perhaps traders in Asia like the idea of something that's opaque and offshore and out of the reach of the U.S. government, out of the reach of the Chinese government. Maybe that's actually ideal, a shadow banking model. Maybe they like that, and that serves their needs. So there's a need there. But if you're thinking about, what are the major, e-commerce companies or financial institutions and fintechs and payments companies and corporations going to put on their balance sheet, use as a real world settlement layer? The standards are going to be higher and different. And so I think we're positioned for the growth from servicing the sort of native crypto economy into servicing the real economy as those kind of converge. I think we're well situated for that. Now, algorithmic or sort of kind of collateralized debt position issued stablecoins and or algorithmic stablecoins are fascinating, and we've certainly seen some of those grow because of very significant kinds of liquidity and kind of token incentives that are kind of getting people to continue to build value because they believe that there's a kind of virtuous circle of enhanced value from the kind of incentive tokens, if you will, that are tied to it. That's an interesting model. At the end of the day, I think it's a foreign exchange defend the peg situation, right? It really is how good is, say, Luna in defending its peg to the dollar, and the history of foreign exchange pegs and the like is very challenging.
Are you talking about us here in England? Are you making reference to that?
There is some history in England on this, but there's actually much more history around the world, right? In so many other places in the world. And so the sort of foreign currency reserve peg model is an interesting one. And I would say in general, I'm actually very supportive of and excited about experimentation in algorithmic stablecoins. I think there's some models that are basically using effectively kind of taking a delta neutral position against the futures curve of USD BTC and deriving, in a sense, a dollar stablecoin from that, because that's actually the deepest source of price data and dollar liquidity in the market. Right. And so it's actually a really interesting mechanism to do that from. So I think there's some interesting experiments that are out there now. So I think those can grow. And I think there are reasons for those to grow. I also think that, again, corporations, commerce firms, financial institutions are also really going to want to use something that actually is a cash equivalent, redeemable, into the banking system product. Yeah. And we think that will grow really big. We think that can grow to $1 trillion in circulation. But it's not a zero-sum game. It is definitely not a zero-sum game. And I think the ultimate aspiration of a synthetic algorithmic stablecoin that can be a unit of account that is decentralized and that could be used broadly, that's I think a worthy aspiration to be thinking about.
Right. Interesting. So there's room for all sorts of different types depending on maybe your risk appetite, maybe technology in the future. You mentioned that $1 trillion value. I've heard you say in maybe some previous interviews that if you look at, maybe total volume of, say, the US dollar, I think you pegged it around, 100 trillion. And you said having 10% of that market in 10 years is maybe a rule of thumb you might have used in the past, with internet startups, which makes you think, like, hey, the USDC could be as big as 10 trillion in 5 or 10 years. Just speak on that as far as numbers, because that's a big number. Although the numbers in these markets are getting bigger all the time, right? What are we, at 1.6 trillion market cap now with all the coins?
More than, I think we're over 2 again.
Over 2 again, okay.
Assets. Yeah.
Yeah.
I think, one is just monetary aggregates continue to grow every year. And so the denominator, as it were, or whatever, is getting bigger every year. Just kind of, that is a reality that we have. But even aside from that, I look at this similarly to how one might look at the adoption of other internet protocols and technologies, which is, there are good examples. So when protocols like HTTP came out, or protocols like SMTP for email and SMS for text messaging, all these examples, what was so powerful about them is that they took what in a offline world took time and expense and sometimes capital expense and other things, and basically turned it into, open, decentralized, permissionless networks. And what happened from that, and what that could just be connected to by any internet connected device, any piece of software on the internet. And what happened with that is the net world output of text-based communication exploded. The net world output of just information as a whole exploded. The amount of, I use sort of tech jargon a little bit, like asynchronous communications, probably 10,000x. And as even just the ability to put software in a browser, which was my first startup, is sort of, how do you do that? I had a theory back then that if you had, web browsers took off and the internet grew, that the net world output of software created would go exponential. And that all happened. And so it's interesting to ask the question, what would happen if you had open protocols for value exchange on the internet that had good assurance behind them, that drove the cost of transacting to zero, and also introduced programmability and introduced the ability to do things that you just couldn't think of, you never could do before? And my view is it's probably going to be like the other areas of the internet. The velocity of money and the sort of net world output of use of money in a system like that will grow exponentially. And so from that perspective, it's, in some ways, it's a huge upgrade over the legacy banking and payment system into this new internet system. And it should, if it follows that history, it should actually, produce a usage and velocity of money that is dramatically in excess from the use and velocity of money that we've had in the world today. That should also help increase economic output, economic opportunity. It should help with so many different things in the world. And you have to believe a number of things. You have to believe that blockchains will scale. You have to believe that there'll be enough regulatory clarity that everyone feels comfortable using these. You have to believe that some of the vexing issues like, identity and financial crime risk can be dealt with without clobbering the whole thing. So there's a lot of things you have to believe. But if you can see the way through those, then you can actually see a world where this could very easily be 10% of the existing electronic, M2 type money that's out there.
And, you're the perfect guy to ask this question. Will that change our lives and humanity more so than the internet and more so than mobile phone technology? And can you speak on that fact?
Yeah, I'm happy to speak on that. So what's interesting is, I got into the internet space related to a conversation we were having before we started the show. I studied, kind of political economy in college. So I was always interested in sort of this intersection of political and economic systems and how kind of the prosperity, these, evolution of economic systems and all this kind of stuff. So I was fascinated by that. That's actually what drew me into the internet in the first place in 1990, because I was like, holy shit, there's this system that can connect everyone all around the world. And there was no commercial internet at the time, but I was experiencing firsthand the decentralized nature of it. I was communicating with people behind the Iron Curtain who were doing what we now would call citizen journalism, documenting revolutions that were happening. And it was like, holy shit, like this is incredible. And so my interests were always derived from, what does it look like if the world is just more connected? And, I think a lot of my interest was in interactivity, information, communications, because that was sort of the first epochs of the internet. And so when I kind of went down the rabbit hole on crypto starting in 2012, and then, as I put together Circle, the immediate intuition was, oh my God, if we can do for value exchange what the internet did for information and communications, it's going to be like way bigger than the web, way, way bigger. The impact on the world will be so much larger, because you're talking about the organization of economic activity, and making economic activity more accessible, efficient, global, and the like. And so I do believe that this can have a far greater impact on the world than the internet has today. But to me, it's all sort of an outgrowth of the internet's role in society, the internet's role in the economy. It's just a natural outgrowth. In some ways, it's sort of birthed out of the primordial DNA of the internet. It's just sort of manifesting itself in this new way. And you sort of see that from the emergence coming from cyberpunks, open source communities, a fundamental ethos that has sort of powered the internet for a long time. It's sort of emerging from that. And so that makes me think it can be way, way bigger. But it does converge with the world of mobile and the world of software and the world of devices. And all of these things are, mutually overlapping technology trends that, that's the sort of thesis of exponential tech, is you get a whole bunch of mutually overlapping things that happen at once that then creates these exponential opportunities. So I think digital currency, blockchains, is a major technical breakthrough that kind of connects to a whole bunch of other technical breakthroughs that then make the whole thing more exponential.
Yeah, and I think you actually kind of walked us through a little bit of a history of Web 1.0, 2.0, 3.0, 1.0 being you, I think hardwiring into your dorm at McAllister some internet access, and speaking with people behind the Iron Curtain. Obviously, Web 2.0, when you're building macro media players for browsers and allowing people to use FlashPayer to watch video, which again, when grandma watches a video, she doesn't realize that that's pretty impressive innovation. And then now we're seeing this Web 3.0 where we're seeing, Facebook turns into Meta. People are worried about the closed metaverse. Now we're seeing the open. We're seeing peer-to-peer exchange, rapid growth. We're seeing explosions in value, kind of not value creation, but value signals like, NFTs, we didn't know that was existing, or even raising money on blockchains via tokens. That was never a possibility, that it enables companies. Anything that you want to mention when it comes to that kind of Web 3.0 narrative?
Yeah. I mean, I think there's sort of a couple of big themes that are interesting. I think the general theme of tokenization is one that we've been passionate about for a long time. And in some ways, USDC is tokenization of dollars, like tokenization of short-term US, cash instruments, right? Like that's kind of what it is. There's always been this sort of concept that you could tokenize other property, other things that exist in the real world. And NFTs, in my mind, are essentially a huge acceleration in tokenization, but starting with the lowest friction, which is the tokenization of digital goods, the tokenization of just pure intellectual property, or the tokenization of entitlements, right? It's essentially an entitlement layer that now can exist, that is provable, that's crypto provable, that is portable, that has all these attributes, right? Tickets, like what the fuck is a ticket, right? I mean, a ticket's an entitlement that someone's got a ledger of. It's got a serial number on it, whatever it is, right? Yeah. But fundamentally, entitlements and digital content and intellectual property. So that's the lowest friction form of tokenization, because you don't have the quote unquote real world that you have to reconcile and deal with, at least not at face value. But that theme of tokenization, I think, is one which we're in the super early stages of, right? And years ago, we used to talk about the tokenization of everything. And that's really just saying it makes sense that rights and titles and ownership should be represented as digital tokens that could then in turn get the advantage of all of the capabilities of these blockchain networks and all of the openness of that. And that can create, very, very different kind of capital market structures, can create capital market structures around forms of goods and services and property that existing capital markets can't service efficiently. And so I think it is really powerful from that perspective. So I think that's an area, very significant area. I think another is, kind of going all the way out on the other end of the curve, so to speak, which is, the emergence of DAOs. And, this has obviously been kind of religion for people in the blockchain space, at least in the Ethereum community, since Vitalik's original white paper. And, from my perspective, this is also a kind of a natural evolution of humanity, a natural evolution of social and economic organization. We're moving into an era where a quote unquote multinational, right, which exists through a legal jurisprudence system with all these books and records and all of these kind of things around them. It's a huge edifice that you have to do something globally, can now just be manifested in a set of smart contracts that govern a set of tokens and govern a treasury on chain and provide a way for labor and capital to interact on a global basis, and for that organization of labor and capital to work on a global basis with a very open form of participation. And so I think we're seeing very nascent experimentation with new corporate forms, in a sense, which I think will ultimately become highly competitive and far superior to legacy corporate forms. And I think over a 10 or 20-year period, what we think of as the great tech companies of today or this or that, I actually believe over time will be more like on-chain corporate forms that will be far more effective at employing labor and capital and creating goods and services. So I look at the DAO phenomenon as also quite nascent, but I see a world where it's going to ultimately evolve into something quite significant in terms of the nature of in some ways, the nature of capitalism and the nature of labor and capital as a whole.
Yeah, I think that's really interesting to consider. But then I also wonder, do we get a USDC without Jeremy Allaire? Do we need a leader? Do we need a guy that's willing to go and put himself in the front of the U.S. Senate committee and, be that voice and show this vision? And that's where I get a little blurry, where these weird autonomous DAOs in the future that just run. And I remember leadership and vision too. Yeah, just your initial thoughts on that. And then I want to talk about what it's like to be in front of the Senate. But what do you think about that?
Well, so, I mean, just to be clear, using the acronym DAO to describe all the things that I just described is probably not accurate, right? Because a DAO stands for a decentralized autonomous organization, right? Where there is no hierarchy. It's just people coming together, voting. It's sort of like a form of market collectivism, or whatever you want to think of it as. It's like this kind of new thing. Do I think that is actually the best structure for decision making and leadership and ownership and others? No, I don't. I do think we will see new experimentation in coordination methods that can be conducted entirely in software that could produce more effective organizations. So I do think it's an interesting laboratory for that. But do I think that like that, that's going to replace the concept of having a CEO and having a leadership team, and having management hierarchy and having different forms of ownership structures? I think, you're kind of fusing those together. If you kind of took what a corporation is today and its bylaws, and you try to codify those literally in code and say, there's token holders, and there's Series A token holders and Series B token holders and Series C token holders and common token holders, and they each have different voting rights, and they each have access to preferred dividend structures. So the treasury spit out different things to different, tokens. Then you got a corporation, you got a Delaware corporation. So you can model anything and you could do anything and do it. But I think the concept for me is moving ownership, governance, and treasury to these on-chain infrastructures presents an opportunity for a radically more efficient form of corporation that can work globally than what we have today. And so it's a little, I'm looking at both the sort of technology and what it enables, as well as the kind of operating model experimentation that something like DAOs represent.
Yeah, no, thanks for clarifying that. I think that's super exciting. And in a weird way, you're almost taking that tokenization concept and then putting it into governance, which again, there's been a lot of talk about it. We haven't seen the rubber hit the road on governance yet, but we're going to see it in the next couple of years. I spent 6 months of last year running to be the next mayor of London, and I got a real dose of what politics was like. I don't know if I'm going to want to go back for any more, but I got to see how, governance works, where one person, one vote, or you try to get a mass to kind of decide on something, and it's not as easy as you would think. I always think the blockchain is, one part technology, one part marketing and PR, one part governance, or we'll see. And then wait till politics gets into the blockchain, it'll get a little crazy. So it's very interesting to see what the future will become. Like you said, programming and all of that will introduce lots of incredible efficiencies. And it is exciting to watch. And I've got guests in here that go on both sides of what they see as everything becoming autonomous or not. I mentioned it, and let's jump into you. I call it jumping on the grenade, Jeremy. You are the guy that jumps on the grenade of regulation and talks about it openly and goes up in front of the banking subcommittee. And I would challenge my viewers to find any other stablecoin leader that does that, because there aren't any. So first of all, thank you for that. I appreciate you going up there and putting the voices out there. What have you learned from talking in front of those committees? What can you tell us about regulation? What's the message to the public, the American voters, people in the world, and even to the government? Like, what do we need to know and what's happening?
Yeah, I mean, this has been, part of the way I've thought about this since we started the company, which is, if you're going to try and build something that has this far-reaching impact and affects mainstream lives, you kind of have to walk in through the front door. This is not a game of, we're going to kind of go off and do something in the dark and it's somehow going to become broadly useful. Now, that doesn't mean that you just kind of go in and say, apply the most strict rules possible. That's not it at all. But you have to focus on just continuous engagement and education, because at the end of the day, whether it's people who are regulators that work in an agency that's job it is to regulate, or policymakers that write laws, they have a job to do. They have a job to do, and they have, a set of risks and opportunities that they're focused on. Policymakers are thinking about both risks and opportunities, economic opportunity, competitiveness, but they're also thinking about, social risks, societal risks, other things. And so just in general, it's like, be open and transparent. And that's just been part of our kind of modus operandi since the start. Now, I think as these technologies have grown, as the amount of activity, whatever it is, X percentage of the American population, or pick your market around the world, just the aggregates, et cetera, the attention gets higher and the risks do get higher.
To continue watching the rest of the episode for free, visit our website londonreal.tv or click the link in the description below.